All right, let's just dive straight into what else is happening. We got to get a sense of the crypto markets because today is a big day with the Fed coming up with an announcement. We have with us Banríon Capital Management Chief Investment Strategist Victoria Bills. Victoria, welcome.
Hi, thanks for having me today.
Yeah, CoinDesk Omkar Godbole, our colleague, he wrote about how Bitcoin's year-to-date rally might stall if Federal Reserve Chairman Jerome Powell, he basically refrains from just signaling a highly anticipated pause to that tightening cycle. How do you read that?
Well, definitely the anticipation right now is that the Fed is going to raise rates for this next cycle, just again in order to combat inflation going forward. Inflation has essentially ran rapid, and we've seen a lot of volatility in the market as of late. And so the raising of interest rates is the only way to kind of combat that from the Federal Reserve side. Now, what we're suspecting and what a lot of economists are anticipating going forward is that we will most likely not need any more rate hikes going forward. However, it is important to kind of keep in mind that as there is a lot of turmoil in the banking sector, on top of just like cooling down in the market as well, that's most likely going to continue to signal that rates are going to cease where they are, although at a relative all-time high at this moment.
Another narrative that we've been hearing about an impact on crypto prices is a sort of banking crisis that we've seen in the US. And there's been some speculation that there could be more bank rescues following the seizure and sale of First Republic. I'm curious just how you sort of see this narrative about how kind of this banking issue potentially affects the crypto market.
So I think what I'll first do is just go into the narrative itself. So we had a lot of banks that had banks that were essentially going into or having liquidity issues back in March. And so a lot of that affected what was going on with First Republic. And First Republic was impacted very heavily in terms of bearing the brunt of some of that residual concerns around liquidity, even though at the time in March, they were very soluble. What we're seeing right now with what's happening with PacWest and some of the other regional banks is something that's very similar. In terms of like their March earnings, PacWest was down 6% in terms of their interest-bearing securities, and 40% of their institutional deposits had decreased. Now, in terms of their cash leverage, they had $11 billion in cash to cover their $9.5 billion in uninsured deposits. Overall, that signals that these banks are very viable and healthy. However, as we kind of see a lot of panic, or what we're seeing right now is individuals who are very reactive to the markets, we're going to continue to kind of see, or if there is a perception of failure within the banking sector, we'll continue to probably see more turmoil in these regional banking sectors.
All right. I want to just go to, there was a particular tweet from Chris Weston from foreign exchange brokerage Pepperstone. He said, sure, bank equity has been hit, but with nothing priced for June and cuts starting in July, if the Fed offers a lazy tightening bias, and he's talking about data-dependent bias, so that's what's written in parentheses, it feels the risk is skewed on the hawkish side. I hope that makes sense to you, and if it does, do you agree?
I definitely agree. In terms of how we're kind of seeing interest rates right now, essentially the effective rate for the Fed, we're looking at around a 5.25%. So what the expectation is that, again, we have decreased unemployment, markets have relatively become steady in terms of CPI. And so all of this indicates, and as well as, again, like continued sort of like hotness, turmoil within the banking sector, all of that indicates to many economists that there is going to be a slowing down in terms of how the Fed is going to raise, if the Fed is going to raise rates going forward. Most likely, we'll see that those rates are going to cool down. In terms of like historically, like 5.25, that was how high rates were back in, I believe, like 2008, before the financial crisis of 2008. And then prior to that, we had like rapid interest rate increases probably sometime in the 70s. I doubt that we will get to that point, given that we have inflation in essence under control, but there is still some room in terms of how the Fed can shift.
All right. Very much appreciated. Thanks so much. We will be watching what's happening later today. CoinDesk TV will take Powell's news conference live at 2:30 p.m. Eastern Time. Thank you so much. That was Banríon Capital Management Chief Investment Strategist Victoria Bills.